Alright, welcome back to another video on how to secure yourself financially, specifically looking at this beginner guide to financial stability. So I'm going to focus is specifically on the cash flow statement. Okay, so why why am I looking at this? To make a quick recap of this. Well, because frankly, I just want to know how companies organize their assets and how they take care of their financial aspect and the accounting and learn the basic is not that difficult. So after all this financial statement, they show you the money, right? And there are four type of financial statement. Balance sheet shows what a company owns and what it owes at a fixed point in time. Income statements show how much money a company made and spent in a period of time. Cash flow shows the exchange of money between the company and the outside world. And the shareholder or the statement of the shareholder will show the change in interest over time. So right now I'm going to focus on the cash flow statement. And the cash flow statements report the company's inflow and outflow of cash. And this is something important because company needs to have cash on hand to pay expense or purchase assets. While the income statement can tell you whether a company uh, made a profit, cash flow statements can tell you whether a company generate cash. And this is done, this cash flow statement is show the change over time, uh, and it views and reuse all of the data from the income statement and the balance sheet, all right? And this, the cash flow statement is generally are divided into three main part, and each part review the cash flow from the operating activities, the financing activities, or the investing activities. So the first part of the cash flow statement is the operating activities. It analyzes the company cash flow from the net income or losses, and most company uh, this section of operating activities reconciliates the net income to the actual cash the company received from or used in its operating activities. Okay, and this distinction is something important here. Okay, uh, to understand these operating activities. Okay, so this is the first part of the cash flow statement. It analyzes the uh, company cash flow from net income, and most of the time these sections reconciliate, or for most company, these sections reconciliate the net income from the income statement and the actual cash generated, or the actual cash the company received or used in its operating activities. And when you talk about operating activities, it's tasks or activities that allow the business to run. Okay? Operating activities. And if we look, for example, here, and we ask ChatGPT for that, okay, just wants to have and to understand a little bit more about this. Okay, let me create a new chat here. Operating activities. Hmm, Operating activities. That's it. So operating activities are day-to-day activities of a business that generate revenue and expand. Okay? Operating activities are the day-to-day activities of a business that generate revenue and expand. These activities are the primary source of a company cash flow and are reflected in its income statement. Operating activities include of sales and service, cost of goods sold, inventory, weight and salary, rents, utilities, and other expenses that are incurred in the ordinary course of business. The cash flow from operating activities (CFO) is a key indicator of a company's financial health because it shows how much cash the company is generating from its core operations. A positive CFO means that a company is generating more cash than it is paying on. Operating activity, which is a sign of a healthy business. Examples of operating activities include sales of product or service, collection from customers, payment suppliers to vendor, wage and salary. Okay, this is operating activities included, right? Uh, Sales of product and service, collection from customers, payment to supplier and vendors, wage and salary paid to employees, rent, utilities and other operating expense, depreciation and amortization, interest paid on loan, income tax. Okay, but again, this is a combination between the income statement and the balance sheet. The TLDR, so operating activities are the day-to-day activities of a business that generate revenue and expense. Period. Okay? So, in other words, is the all activities or operations that allow the business to run. Okay? That allow the business to run. Okay. So this is operating activities. Okay? The day-to-day activities of a business the day-to-day activities of a business that generate revenue and expense. Okay? So the first part of the cash flow statement analyzes the cash flow from the net income. And for most companies, these sections reconcile is the net income from the income statement and the uh, and um, the actual cash the company received from or used in its operating activities. So to do this, it adjusts the net income for any non-cash items. And non-cash items are items that a company, uh, so this non-cash item are items that a company exchange. For example, if I ask you this, what about example of non-cash items here? It refers to items that affect the income statement, but does not involve any actual cash transaction. So such as depreciation and amortization, stock-based compensation, provision for bad debt, gain or loss on disposal of assets. Mhm. Mhm. So depreciation and amortization, deferred tax liabilities and assets, and stock-based compensation, provision for a bad debt, unrealized gains or loss on investment, impairment charge. These are the expenses that reflect a reduction in the value of assets due to damage or obsolescence. Gain or loss of disposal asset. But again, this non this non-cash items, there are items that affect the income statement. These are items that affect the income statements, but doesn't involve yeah, but don't involve any actual cash transaction. Exactly. All right. Okay. Okay. So that's slowly to make sense here. Okay. With the operating activities, which is the first part of the cash flow statement, that it analyzes the cash flow from income or from net income. In most companies, these sections reconcile is the net income from the income statements and the actual cash the company receive from or use in its operating activities. And to do this reconciliation, okay, between the net income from the interest, the net income from the income statements, and the actual cash that the company receive from or use in its operating activities, it adjusts the net income for any non-cash item. Okay, this is one adjust. So it adjusts the net income for any non-cash item. Items that, items that, mhm, any non-cash item. Mm-hmm. In cash item, any non-cash item. Uh, so items that affect the income statement, but do not, but do not involve any cash transaction. Okay, but do not involve any action, but do not involve cash transaction. An example of this is depreciation and amortization, so it affect the income statement of the company. Deferred tax liabilities and assets, stock-based compensation, gain or loss on disposal of assets. Okay, at least these three examples, depreciation and amortization, these are expenses related to the wear and tear of assets over their useful life. Stock-based compensation, this is a form of compensation which a company issues stock options or award to employees, which have certain value but does not involve any actual cash transaction. Exactly. So stock-based compensation is a form of compensation that company issue. It's a form of compensation company issues stock options or award to employees, which have a certain which have a certain value but does not involve any actual cash transaction. Okay, in provision for bad debt. Okay, this is an expense related to the estimation of uncollectible account receivable, which reduce the net income of the company. Exactly, provision for bad debt, unrealized gains or loss on investment. This gain or loss on investments that have not been yet sold but reflect on the income statement based on the fair value. gain or loss of disposal assets. These are gains or loss that result from the sale of an asset which does not involve any actual cash transaction until the asset is sold. But again, this is non-cash items example, okay, where this affect the company income statement but does not involve any cash transaction. And you might have, so examples are depreciation and amortization, okay, expense related to the wear and tear of asset use or of assets over their useful life, okay. Stock-based compensation, where now company issues stock options or awards to employees which have a certain value but does not involve any actual cash transaction. Stock-based compensation and on gain or loss of disposal assets. These are some examples of non-cash items that may be reported on the company income statement. It is important to know that while these items does not involve cash transaction, they can still have a significant impact on the company financial performance and should be carefully considered by investors and analysts. So the way how this operating activities, which is the first part of the cash flow statements that analyze, is the net income or the cash flow from net income, uh, that is from the income statements, and conciliate with the actual cash the company receive or use in its operating activity. And the way to do this reconciliation is by adjust the net income of any non-cash item. Okay, this is one. So just adding back depreciation expense and adjust for any cash that was used or provided by operating assets and liabilities. This is the two-way how they do this reconciliation, okay, of the net income and the actual cash the company receive from or use in its operating activity. The net income, it adjusts the net income for any non-actual or for it adjusts the net income for non-cash items. Non-cash items are items that affect the income statement but do not involve any uh, cash transaction. For example, depreciation and amortization, which takes the account the wear and use over their useful life. Okay, it takes into account the wear and tear of assets over their useful life. Uh, Stock-based options or stock-based compensation, where now company issues stock options or awards to employees. They might have or they have some value, but there is no cash transaction involved. And adjust for any cash that was used or provided by operating assets and liabilities. Okay, any cash that was used or provided by other operating assets and liabilities. An example of this, okay. So when I look here at this, operating activities in a cash flow statement. The cash flow used in the day-to-day operation of a business. And this activity are typically related to the revenue and expense and including before. Cash inflow from customers, cash outflow to suppliers and employees, cash outflow for operating expense, cash outflow for income taxes. The net cash flow from operating activities is calculated by subtracting the total cash outflow from the total cash inflow. Okay. A positive net cash flow from operating activities indicate that a company generated more cash from its operation than it expended, while a negative cash flow indicates the opposite. Operating cash flows are important because they show how much cash a company generated or used in its core business operation. This is useful for investors and analysts who want to understand the financial health of a company and its ability to generate cash from operations. Financial health. That's right. Financial health. Interesting. Very, very interesting. Mhm. Okay, so operating activities. So here is explaining is okay. The first part of the cash flow statement, which analyzes the company cash flow from the net income, and most companies use these sections to to reconcile the net income from income statements and the actual cash a company receives from or used in its operating activities. To do this, it adjusts the net income uh, for any non-cash items that affect the income statements, but do not involve any cash transaction. For example, depreciation and amortization, where it takes into account the wear and tear of assets over their useful years or over their useful life. And another example is a stock-based option or stock-based compensation, where now company issue stock options or awards to their employees, which have value, but there is no cash transaction involved. And adjust for any cash, okay, and adjust for any cash that was used or provide by other operating assets and liabilities. Okay, and adjust for any cash. Okay, and adjust for any cash that was used or provide by other operating assets and liabilities. Okay. And the operating activities of the law is refers to the cash flow generated or used in the day-to-day operation of a business. So you have cash inflow from customers, cash outflow from suppliers and employers, for operating expense, from interest cash flow inflow from interest and dividends, and cash outflow from income taxes. Mm, 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 mm. Mm, 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 mm. Mhm. Okay, okay. Let me, let me see here. And check. Okay. So yeah, that'll be all for this video. Take care. Bye bye.